You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
Good morning, Quasar Markets Live. Good morning, BigBeat. How you doing today, my friend?
Well, sometimes the crystal ball does actually work, right? All the things that we have been talking about in regards to the economy, Powell, what we've been seeing in the markets, and here it is, right? I said, be careful of the taco trade, be careful of Trump because you don't know what he's going to do. I've said, be careful of these markets. The FOMO is way out of whack. I've said, be careful that there's going to be something that sets this off. And, one of the things that we've been talking about for a while here, Howard, is M&A, right? M&A has been very hot. In order for M&A to be hotter, you need rates coming down because you need to be able to borrow money. And some of these companies just have cash on the sidelines. And guess what? These companies that have been having cash on the sidelines have been doing that. And the biggest company out there that I did something very interesting yesterday. I bought Berkshire Hathaway, BRK.B. I haven't bought Berkshire Hathaway, and it's been decades since I've done that. Why? Because he knows what's up. I mean, folks, he knew it. He raised cash. He raised the most cash in history, knew what was happening in the markets, and here it is. And guess what? Berkshire Hathaway is actually up today. Did I sell my crypto in the sell-off? No. Did I sell stocks over the last week and two? Yes, we did. And I raised cash for this very reason. I've been asked 3 times already this morning, does this mean we buy the dip? No, it does not mean you buy the dip. You got to let this work. You got to let it work out through the system because right now, all this FOMO is hitting pretty hard. So I think people are waking up this morning. And if you ask me, if you want to know the answer to all of this, there's 2 answers. Number one is go to, and Howard showed you yesterday with the Fed, the chances of a Fed cut now have gone through the roof for September. The Fed's got to wake up, right? Here it is. The numbers are coming in. Jobs were the worst jobs since October of 2020. Wow. And now you also got to look at the bond market. 10-year now just collapsing this morning. Very quickly. Why? Because that means that big institutions and big money is moving into the bond market to protect themselves. So they were behind the curve. I had a long chat with a big firm, a big firm in London yesterday, and they all said, Steve, we haven't been ahead of the curve, but we've been listening to you, and we're going to start doing that today, meaning over the overnights. And they did that in the overnight markets, and you saw what happened. So here we are. No, this is not buy the dip mentality. Although, look, I expect some FOMO to hit. I expect some retail to buy the dip, but this is not buy the dip moment yet.
Yep, as you said, payroll jobs came in at 73,000, far below the 100K estimate. Yeah. And if you combine it with May and June's data revision, down 258,000 jobs, revealing a much weaker labor market than previously believed.
Yeah, and this was exactly the thing that the Powell hung his hat on. He said jobs are good. This is my mandate. Jobs, and they're right. He said jobs are good. Jobs aren't good. Literally 2 days later, the numbers come out. It ain't so good. Now, manipulated? I don't think so. But I mean, my God, the timing on this is just impeccable. Like, it's crazy. Oh, you say, hey, no, the reason I'm not lowering rates is because the job market's great. Job market isn't great. It's one of the worst job markets now. The numbers are coming out bad, and it's getting worse. The worse than expected. Right. So now it's getting even worse. And, one of the things that we said, and I think we talked about this a couple of days ago, too, again, was that earnings season was here. Right. And I said this, that they've lowered the bar on earnings on all these companies, but guidance hasn't been good. Amazon gave you terrible guidance. I did not want to be a part of Amazon. And guess what? Now Amazon is getting absolutely crushed today.
Yeah, absolutely. As you said, Fed Governors Bowman and Waller, who did dissent, they did point right to those job numbers. They called it out, that's what they said was the risk. Also weighing on the markets, obviously, Trump's new tariff ways. Again, very similar to April. We're back at Liberation Day, I guess, today. 70 countries, including Canada, at 35%, Brazil at 50%. India 25%, Taiwan at 20%, Switzerland 39%, and others all effective April 7th.
I mean, if you're betting on the taco trade again, okay. I will tell you right now, we're seeing the Swiss president coming out right now talking about it's very difficult for Switzerland to offer more concessions. I mean, they're already talking about this stuff. Look, I don't see this market getting better. Like I said, I was preparing for this weeks in advance. For those of people that were asking me about the VXX, but look at it now. Look at the VIX. It's just jumpy, right? And Howard knows, it's very simple. You buy the insurance when you have to, before you. Yeah, I mean, it's crazy, right? You need to protect the portfolio. You buy it when you can, not when you have to. Right? We've been beating this into everybody's heads that this is how it's happening, and people are, oh, well, it's down again. The VIX is down again by what, 0.5%? Oh, down again by 0.5%. Now it's up 8%. Right? That's what we're looking to protect ourselves with. Right? If you had the VIX and you had these insurance policies on your portfolio, you're smiling because you put more bang in your buck and your cash back in your machine, and that now you've got powder to protect yourself. And now you still got your position. You didn't have to cash out. You didn't have to do what I did because I had to because of the size of the positions. But wow, here it is. And I did look. My crystal ball's still broken. It's still sitting in the back behind me. It's still broken. But I knew what to do. I knew this market didn't make any sense, right? And my dad always says, everything in this world is common sense. Did you have common sense when you're playing the markets here? And I think the common sense went out the door with a lot of people, Howard.
Yeah, can't argue there, Steve. We've been talking about the VIX when it was at 14 and change there. More than one time, talked about a couple of different ways you could trade it also. So hopefully you guys got that protection. Like we said, that is what it's there for. It can offset those losses if you still are in the market very quickly, or they can just be gains if that's what your only positions are. So buy it when you can, not when you need it for sure is the thing there. As you said, some mixed tech earnings. You got Apple topped expectations with strong profit. Revenue growth. Stock has risen modestly. Is it still? It might be down now. Nope, still up about 2.28% here. And pre-market trading, they did warn of caution around sustainability of growth and the tariff exposures. But Apple fared pretty well there, Steve.
Yeah, I mean, we saw it earlier. I mean, if you pull up a chart of FedEx, you know exactly what's happening, right? I mean, FedEx told you just literally everything you needed to know. that they're not, the shipping is having problems and they're not getting as much sales, right? AWS numbers didn't come in as heavy as we thought they would come in. I had a feeling about that too myself. And cloud, while it's still the only thing that's keeping most of the stuff up, and you're seeing companies like Apple bend to the will of the people, right? Foldable phones. And, you saw where Tim Cook, and I've been beating the table over this for, I don't know how long, 3 months now. Tim needs to open the wallet up, and he's about AI. He's behind, right? So this is one of the largest companies in the world that's not participating in the economy, really, because he sold the most phones. That's why he thinks it's important, right? He sold services. Again, he sold apps, right? AI, guess what? Guess what his number one services that he was selling? Not his AI. It was everybody else's AI. They were downloading everybody else's apps. Oh, maybe I should get involved in this too, right? Now it's going to cost him. But you saw the visionaries, the Mark Zuckerbergs of the world, spend billions and is spending even more money on AI than expected. So they were ahead of the game. And guess who stocks up, right? It's Meta.
Yep. So Apple's iPhone revenue was a beat, 44 billion versus 40 billion estimate, driven by the pre-tariff rush up, like we talked about. They did shift production to India, but that's not going to help them at all because they just got hit with 25% tariffs. So I don't think that meeting that the president had with Tim Cook, where he advised him to go to India, worked out very well for Mr. Cook here. And they pointed out tariff costs are going to be 800 million in quarter 3 and 1.1 billion expected in quarter 4. So even with the good parts of Apple, they did have some negatives also.
Well, but let's be honest. The reason that the Apple phones are doing so well is because of the tariffs. People are front running the tariffs. It's exactly right. I mean, they're saying, okay, well, if my phone's going to go up a whole lot more, I might as well get one now. How much better can the new iPhone 25, 30,000, whatever the new number is? Is it going to be better than the one I have? Not much. We already know that, right? The only thing I think the new one's the foldable too, so they're adding to it. That's about it. And what? Another chipset? Oh, with the best chipset we've ever had. I mean, it's always the best chipset you've ever had. Stop saying stupid shit. I mean, I can't help it. It's like, come on. Right? You want to you're Apple innovate, right? They're not doing that. So, we're hearing now that job revisions may reflect the May and June data as well. So there may be even more.
They went down 258,000. 258,000. That already happened. Yeah.
Yeah.
Amazon, as I said, down about 7.2% here. Their quarter 2 profit was up 35% in sales, up 13% to 168 billion. AWS revenue was up 18% year over year, but guidance for Q3 was right in the midpoint of the estimates, and it spooked the markets for sure. Tariffs, a major concern there. I was wondering if they were going to address it, but they didn't. Amazon's one of those companies, remember, that at the beginning said they were going to add the tariffs to our bill, and we're going to put a thing that even told you how much of your bill was based upon the tariffs. Decided they weren't going to do that, played nice. But one of the companies that, as people have done research on, that has raised their prices due to tariffs. So it's a not do what I say, do what I do type of situation there too. I think some blowback coming from that also. We'll tell you that the one that showed up really well on that report, who promised not to raise tariffs and who hasn't, is Walmart. They said they particularly pointed them out on the opposite end of the spectrum as a company that has not risen there. Steve, I know you played Fig yesterday there, Figma. I was talking about it in the morning. I sat it out. I did not play around with it, but it's just insane. Stock tripled on IPO day, now valued at $67.6 billion.
Yeah, I'm calling this the Fig top, meaning the whole market, right? And the Fig money coming out and going into Fig like this, it's out of control. We use Figma here at Quasar like a lot, right? All the developers use Figma. We have ideas, we put them on the Figma board, but we don't spend billions of dollars on Figma. It's a software piece, folks. It makes your ideas come to life in a lot of ways. That you have your idea and you can kind of map it out. It's become a household word amongst developers. It's Figma. It's Figma. But this thing is out of control. I mean, okay, you have AI in the Figma, so what? Everybody has AI now, right? Talk to me 2 years ago. Where were you 2 years ago when your AI? You didn't have it? Oh, okay. Apple still doesn't have it, right? So the world of AI is still changing very quickly. But this is out of control. This is nuts. And this is why I'm saying that the markets are silly, and we were prepared for it, right? So, I mean, 137. I mean, I didn't think there, I was talking to my friend Jay Woods on the floor of the New York Stock Exchange, where he was sitting right there at the post, and I was like, "What do you think?" He goes, "This is as I think the words he used was too rich for my blood."
I had a bid in at 50. I got passed right by. I was in at 50. And that was higher than I wanted to pay, but I was willing to pay 50. And amazingly, I thought I actually had a fill. I was jumping around for joy for a second because for some reason it populated into like the stocks that like I own them on TOS and not in the thing. Yeah, so I was like, whoa, I was getting ready to hit that sell button, but I was trying to sell something I didn't own. I couldn't sell fast enough.
Well, it's interesting because I was, that's why we have social media on our platform, right? And so we know what people are thinking too. The number of people at Robinhood that wanted to buy 10, 30,000 shares of it, that got filled with one share, right? I knew that meant that there was meat on the bones left. And I mean, I played it 4 times yesterday, hit all 4 times. But it's too rich for my blood. This is nuts, stupid. But I saw the direction.
20% almost this morning, Steve. And listen, you
can't short. Well, you can't short
you can't shoot. Well, you can't short it. There's not available to be shorted yet. It takes.
Well, you can't short an IPO the first.
I don't think they have option. They usually don't have options yet, so there's no way to do it. So I will say, while this price is crazy, as someone who trades memes and penny stock pumpers, sometimes this thing has a chance to go to 200 today. Shouldn't for any reason. It's like Circle, right? We know what it did on its IPO. Traders are going to flock to it. I mean, I'm going to point out their, valuation 66 billion right now. You know what their revenue was last year, Steve? The entire year?
Was it 1 billion?
749 million.
Oh my God! I mean,
yeah. And they had
80 times revenue.
They're expecting net losses, net losses this year. I will announce the Crypto Hondo IPO will be launching in a week. We want all of you to buy in on it because it's only going to triple. Every IPO triples in the first day now. I mean, I will say it's too, while I like it, I think it's fun to watch. It's not good for the industry because these are the things, again, where people get burnt. If you look at Circles, and I would consider Circles an outlandish success.
Real quickly, Howard, Fed's Hammock just said that inflation miss has been bigger and lasted longer, but said that the jobs number was disappointing. So, and that was the person who voted to keep rates unchanged.
Yeah,
they're changing their minds already. Yeah.
Well, yeah. I mean, listen, they're jumping on. They're not changing their minds. They're just jumping off the ship.
Well, they might not be on the ship.
Because I do want to point that out is there are quite a few moderates on the board that you could tell from their talk wanted to dissent but didn't feel comfortable. That's not what they do. They usually vote as a group. Like we said, that's why it was such a big deal. It's been 30 years since we saw 2 dissents. So I do want to point that out. Susan Collins, I mean, I could go through a few of them. Golshi, who also, they have not been hawkish by any means. But there. Steve, so Figma just, taking over the markets. As we look here, Tick has surprisingly gone positive. And I got to say, advanced decline's gone from what was negative 2,000 to about 1,700. So as you said, what worries me more is that people may be buying this dip here. Be careful, just be nimble. That's what I told my traders in my room when I sent out my watch list today was, is there a chance for some bounce today? Is there a chance, actually hourly charts and short-term chart technicals are all pointing to a little bit of a bounce here right now on the intraday, but I'm not trusting that bounce. And there are some key levels you got to make sure you watch on the way up to see if there's actually any kind of real buying going on. So I do want to point that out. Don't think that we're just going to drop. You will probably see at least a little attempt here, and we've seen it across Bitcoin as the predecessor to it that dropped down to 114, 127, now back up at 115. I will tell you, I do not trust this move to the upside by Bitcoin. I am ready to buy some at 112. 112.
Okay.
So
yeah, I mean, my phone blew up last night. People asking me about Bitcoin. When should we buy? When should we buy? And I'm like, I'm not. I'm
it just
waiting.
hasn't. We haven't had, because you know why, we haven't had capitulation. Steve, that's what I point out is this drop down, as I was going to tease you, because while you are correct in that selling at your time we've only retraced to where we were 5 trading days ago. This huge drop that everyone's like losing their mind about, it hasn't been capitulation. So, and I think the way to term that too is that's why you said you're not buying the dip. This isn't capitulation yet. This is just a minor blip. So and what we're warning you is this is the first start of the cracks, as Steve Flanagan says, to the tectonic plates underneath the markets.
Yeah,
that would be the takeaway that I have. What I was looking for today, which we haven't seen from anybody, is talk of an emergency Fed meeting or anything like that, an intermin meeting. So we'll see that, but that's what I'm keeping an eye on. You guys brought it up, you and Steve Flanagan, and I do think it's something you got to be keeping your eye on. Any kind of sort of news to that would
yeah. But if you're hearing from Hammock and you're hearing some of these Ford Fed members now saying, oops,
we messed up. Do they say, hey, can we get a take back
on a mulligan? How do you say? Can I get a mulligan on a
take back? I think we'd call it more than a mulligan. Yeah. I guess golf is a good one to use, but I would just
time machine and go back to the meeting. Yeah,
but that's So that's what we see. I would say even on these Apple earnings and stuff, and good earnings again, like we stressed yesterday, take profit, take profit, take profit. Can't stress it enough. If we look at all those high flyers yesterday, most of them have retraced at least a good portion of those moves to the upside. So make sure you are being nimble. We keep talking about that. You have stop losses in place. You have take profits in place. You can trade this.
Look at gold, Howard. Look at that thing. 33.53 now on the highs of the session here. Whew.
Yep, absolutely. If tariffs are coming, I mean, it's April. It's April again. So if you want to know what you should be buying, look at what jumped up after April. That April swoon, because that's what this is. It means now the market's realizing that tariffs are here, that they are not going away, and this is this was the. Oh, I'm on gold. I meant to be on the Qs.
There's a new poll coming out that. The top 100 economists in the United States says 89 of them out of the 100 said they are concerned about the quality of official U.S. economic data. 41 of them saying they're very concerned.
Well, I mean, you have to be. This revision is one of the biggest. I mean, I don't know. I'd have to see numbers on it, and obviously it came out too close to us going on to really find anything. But what I would say is it's got to be one of the biggest revision percentage-wise is that we've seen to a labor report. Labor should be pretty easy to. There shouldn't be a ton. It should not be a one that has those types.
It is an interesting way for those of you who don't know how it works. In the DOL, Department of Labor, they have divisions around the country, and what they do is they gather all of the data in each of these regions, states. Some of them are just states, some of them are regions, and they bring them together to look at the numbers of unemployment. So let's say like here in Florida. They get all the numbers of the state of Florida and they put together and then they send it up. And sometimes those numbers are different because they have to revise them because maybe someone got a job in between there and didn't quite get, or maybe they had a fake unemployment thing and they missed it. And there's a lot of little nuances, but for it to be
false filings that get reversed, in other words, if you filed for unemployment and you didn't lose your job and they catch you, that's a revision.
Yeah, there's a lot of little things.
But those are usually little numbers.
Right.
Big number like this is going to add. There's going to be some questions. There's going to be some people that have some answers to Congress. I have no doubt there will be some committee meetings that come out rather rapidly on it. As you said, Steve's not buying the dip. For me, I'm more about if you are buying the dip, make sure you're taking your profits quickly. I'm a trader by nature, so I will trade it Not necessarily stocks, but crypto. I'll be trading today for sure. VIX, my position there. I have a couple of different things going on there. I have a short-term trade I talked about and a long-term trade that I talked about. I will take profit on the short-term trade on the open. The long-term trade, I'll keep a little longer because I think we could see 20 on the VIX. You know what I mean?
Steve Flanagan says 3 rate cuts ahead. Earnings are great. Let markets correct, but today is all about the institutions driving markets. I have to ask, Steve. I mean, I agree with you on most of that, but I don't think the earnings were that great. I think the earnings, they lowered the expectations.
Yeah, it's been a mixed bag, I would say. Yeah, because it's year over year has not been as good as you would think because the earnings, the forecasts were expected to be moderate. Along it, and that Michael Litt brought that up, that the expected EPSs were moving down every month over the last 7 or 8 months.
Yeah.
And that's the case is where we were normally looking for, let's say, a 12% increase. We were looking for a 2% increase. So they're hitting lower numbers, as you said. They lowered the bars a little bit. And I think the other part is the takeaway has been about the forward-looking guidance. Again, I think just like driving the Fed driving with looking in the rearview mirror, I think, the earnings is a rearview mirror to me. I want to see the guidance. The guidance is what's driving the market right now. And I would say CapEx, like you said, I wanted to point out earlier when you on your tirade there is, CapEx 2 quarters ago was a problem. People didn't like it. Now they love it. It's funny how that, reverses over time, right? Remember Meta getting hit very hard 2 earnings ago for having too much CapEx. It's funny how that stuff can go. Yep, I can. There you go, Mr. Fling. I see what you're saying. Yeah, considering how bad it was, yeah, they're holding up well. You are correct. The question is it a finger in the dike or is it a good foundational wall that's holding it up? That's going to be the question. I'm still in the middle. As you guys know, I'm in between you guys. Like in most things, I'm the moderate in the group, and I'm sort of an in-betweener. I see bright lights in certain areas, and I see brick walls in front of me in the other areas. I agree with you on your Berkshire Hathaway a little bit. That one still worries me a little bit because I think market sentiment, I think that the kids don't like them. So this will be a good judge because, like you said, if institutions are going to put money in, I would have to think that they would see Berkshire Hathaway as an attractive valuation right now, down. So I just want to pull up the numbers and not guess it. Down 7.28% over the last year. Is this, that would be one where you could probably, they always have big institutional buying into Berkshire, right?
Yes. And Berkshire Hathaway has 2 big industries. That one of them is insurance and one of them is moving things around the country, right? Whether that's coal cars or trains. And of course, they're also in the retail sector with See's Candies and furniture stores. They have a lot, right?
Dairy Queen. How can you leave my Dairy Queen out?
I mean, I love Dairy Queen. I love Dairy Queen, but for me, it's about him having all that cash, and he does not like cash.
Yeah,
I don't know what he does.
No, I thought it was, I still think it's going to be. I'm still putting my money on. I wonder if I can bet that they buy the railroad, that they buy another railroad, that they merge.
Well, what's interesting to me is when he sold. I think he sold like almost all of his Bank of America, right? That he realized that banks ain't going to do so well, and I agree with him on that, right? He made a good killing.
Well, that's a tough one because U.S. banks. I just want again, I like to clarify things because he's still heavy into Japanese banks. He's still heavy into new down in Brazil. So I just want to preface that because he still has large bank earnings holdings. He's just moved them outside the U.S. And we talked about it. I got into those. And those Japanese banks because he did. They are a little different there. They're called trading houses and they're more like hedge funds than banks. But he is big there, and we know.
But I mean, this is a guy who bought Sirius XM. This is a guy who bought Domino's Pizza. This is a guy who bought Pool Corp. So he thinks people are going to literally be on their car, listening to the radio, out by the pool, getting their pool cleaned, and eating Domino's Pizza. I mean,
Yeah.
he thinks people are going to go back to what they were doing. Good morning, Clifton. And you know, I don't think that's going to be the case, right? I think he has a different perspective of what is really going to happen here. So I wouldn't be saying that. All right, we are
Okay, markets open here, 5:58:30 on the Qs. Let's see what we get. Move this to the 1 minute here. Will we see the capitulation? Is the blood in the streets, or does the dip buyers come running out in force?
I mean, look, it's Friday. I don't know if the dip buyers are. I think they're tired. I wouldn't touch the Qs.
Well, you got a few things at play too. The first 20 minutes are going to be the algos fight that out, and they're going to sell the bad news. So that's what their job is. That you know, based on all tariffs, the new job report first look should be to the downside, based upon how algos are programmed in general. So we'll see what we get here. I'm watching to see if VIX jumps up at all. Oh, I got to look at my position there. Sorry. Give me 1 second.
I mean, it seems to be fairly muted considering we've already had the big sell-off. I don't see people coming. Canada's July manufacturing PMI coming in at 46.1. It's better than 45.6. So guess what? Manufacturing is not moving to the United States. It's moving to Canada.
Yeah, I don't have enough reference point there to know if that's, you know, what have they done the last 3 months, 4 months. You know, for me, I have enough trouble keeping my mind around what the U.S. economy is doing. I can't get into those things as much. Let's see, Qs. There's some fighting going on right now, so there's some fighting. I want to see what the Mag 7's doing here. NVIDIA back down 173.60, so down about 2.38%. Amazon has bounced up, like I said. You got your dip buyers there, now only down 6.67% here. Interesting one. I'll let it play out. I will say that I will be most likely, if it continues to slide by.
I'm actually going to buy Amazon here. I'm doing it now here. I'm going to buy big on Amazon. Take some quick profit here, but I am going to buy some Amazon here because I think there will be some dip buying. Already seeing it now. It looks like. All right, I am now in Amazon. But I do like. I think you will see some Amazon buying here.
Wouldn't surprise. Like I said, that's one of the ones that I looked at and said, hey, you know, long term, Amazon's a great company. People still, I use it more than I use anything to buy stuff. Moving to the downside, about to hit VWAP here. Here's your key point here, Steve. 216.
That Dow now down 500 now. Wow.
Yeah, Dow's dead today. Yeah, down 1.15%. Q's down 1.4. SPY down 1.22. Little surprised RUT hasn't got hit a little harder. The small caps are holding up pretty good. It's only down 1.67. So I'll actually give some credit there. That shows a little bit. Gold unable to hold at 33.50, pulling back a little bit there. Bitcoin at 115,300. Again, a little bit of a sell-off there. Not surprising that IBIT's going to hit it hard today, if I had to guess. There you go, VIX, 19.26, like we talked about at 1420. I said it's got room to 20 here. Give me that 20 and I'm out.
And there's 218.09 already here.
Wow, chip sector getting killed here. You know, as Steve mentioned, having gunpowder on the sidelines, having cash on the sidelines is important because you can get some good opportunities here over the next week or so. There you go, Apple bouncing for you, Steve.
And I just took that Amazon off. Boom. Right in front of your eyes, boys and girls.
Nice.
I was in an average in at 217.16 and out at 218.22, 5,000 shares. So nice little move there. Yeah. Wow, that was a good move. Really good move.
Yeah.
Could go higher though. I think Amazon could go. Yeah, 218, 70 now. There he goes. Oh well. Nice little move there. Take that profit run.
Tick down 355, advanced decline dropping down 3,500. Dixie, man, King Dollar getting hit pretty hard on this tariff news, retracing all the way to the cup and handle here. Gold holding up pretty well at that 33.45 area here, so took one little dump down, but holding up pretty well. Same thing with Bitcoin bouncing okay. Again, I don't trust Bitcoin unless it can hold 116,750 today. Got to get back above 116,750, or the bulls have lost control of the market.
That's right. Yeah, the bulls don't have control of the market today, no doubt about it. And I've said this: just be careful out there. But I do like some of these little bigger plays.
There's definitely trade in there, and there's some things I'm liking getting close. Yeah. You talked about it. Ford's getting close to my 1080 area that I like it at. So I'm going to be watching Ford here for a longer term play for me. I'll be buying the dips on Coinbase. Got hit pretty hard last night, but I will tell you, after reading through the president's Digital Asset Council's release, 166 pages worth, Coinbase is going to be a big winner in the new world, or the intersection of TradFi and DeFi. They basically carved out the SEC. Paul Atkins came out yesterday in a speech and wants to carve out regulatory sandboxes for what he called super apps, things like a Coinbase and a Robinhood that could be that could sell both stocks, options, futures, everything. So it will be very interesting to see how that plays out. We haven't seen those type of regulatory sandboxes since Giancarlo was in charge of the CFTC. So very excited about that news. Yesterday, the last 2 days, we had back-to-back days with some great reports out of the current administration in regards to crypto regulation. I have to say, Mr. Lutnick did not get his way, because Tether is one of the companies, again, where they pointed out that the way that it can't have Bitcoin in your stablecoin basket if you want to be U.S. certified, and Tether does keep Bitcoin.
I'm liking this bounce here. There is some buyers coming in here. I mean, how is it sustainable? I don't think so, but who knows?
Definitely be somebody.
Oh, there you go. Waller just said Fed shouldn't wait for the labor market surge to cut. Kaboom, kaboom.
Well, him and Bowman will be doing their victory laps for sure. Hey, they were right.
They're not the only ones that were right, Howard. We were too.
I think anybody that knows what was going on was all in the same circumstances. Hell, Mr. Flanagan, they should have listened to you and cut, right?
Hey, I still say it. I will give anybody a free account at Quasar Markets. Anybody that wants one, I'll give them a free account.
Tick still fairly negative here, down 444. Advanced decline to the downside, 36.50. My portfolio up nicely today because of BigBeat, so I thank him very much for that.
That's what we're doing here, Howard. I mean, we are creating an ecosystem here to help each other. No fluff here. No nonsense here. We're trying to tell you what's really going on.
And I didn't sell it. And I'm going to say something. I didn't sell any of my long-term holdings. As you know, I listen. While I listen to you, I hedged with VIX and QQ puts. There's a reason you can use options to your advantage. You can leverage that money and cover your portfolio. I'm not a big whale. I'm a small minnow. So
And
I can
the
do
thing
that.
is, my portfolio looks the same as it did last week because I did all these things, right? Yeah, I sold it, I raised cash, but my numbers are still the same because I did protect it. And that's what I'm trying to tell people is protection is there's a reason why you have protection on your house. That's why you have insurance on your house. If it burns down, you have car insurance.
That's what I mean, and that's why, it's funny because everybody thought we were fighting that day about some of these things. And I'm like, no, I ask questions because I want to know so that I can gauge how how I can play it. Steve and I are very different. I don't buy 1,000 shares of Amazon or something else and scalp it. I buy one and I hold it longer term. You know what I mean?
Right now,
like I said, I'm a minnow. But what I can do is I can use the information to hedge my portfolio. I told everybody what I was doing with the VIX. I told everybody when I bought QQQ puts, and I did them in a covered way that I didn't have to spend a ton of money to do it. Again, there are tools at your disposal. We teach them. Go look at the videos with Dr. Alan Ellman from the Blue Collar Investor that we have on our site. He has it all broken down. Him and I did 20 some odd episodes that break down how you can use covered calls to do these things in a way that
the VXX right now, 45 right now. And people were complaining about 40 and 41. Now it's at 45. That's a 10%.
That's what I mean. VIX, mine's at 1969. Like I said, at 20, I will pull off one of them. The short term will get pulled off at that point.
And the Qs are still dropping here, so you're probably going to get it here, Howard. And 219 now, 219.04 and 07, 10 now on Amazon. Looks like Amazon may push now. So,
yep. Again, be nimble, take profit. That's what although I'm saying that, and I am holding the puts for a little bit because again, they're protection for me. So it's not. I can take if those go down, it means the rest of my portfolio will be going up. So.
Oh, look at the VXX now. It just took off. You should be good to go on Howard and your VX.
There goes 1997 at 20. I will take off that short-term trade.
You should have it here in a few minutes. VXX 45.20 now, still pushing here. Yeah, Q still pushing. Wow, well done.
Thank you. There it is.
Congrats.
I'm out 2003. And again, I got in at 1478.
Right. I mean, he did that in just a few days. It's not like we had to wait it all out, but I think that wailing and gnashing of teeth.
Ask my man Ron, did you go in, Ron? You hit me up with all the questions on those on that VIX trade. I hope you followed. $45.20, almost down 4,000 here.
Oof! Look at the VIX now. Baby.
I took the profit a little quick, but like I said, I still have my long-term part of it.
And we don't chase. We want to be the ticker taker. I want to be the person that's in it before everybody else is. I want to be the person that's out as they're rushing to the gates to get out.
Yeah, I will also say, I my other hedges, I have TLT heavy.
Oh, that makes sense.
Yeah. So, and that was based when I asked, and that's from you and Mr. Flanagan when I asked, okay, Dixie's going up, where is that cash going to go? You told me bonds. So,
and look at it today. I mean, we were 4.4 earlier this morning. We're 4.25, 4.24 and 8 right now on the 10-year. So again, to explain it, what it means, what we're talking about the bond market is when the percentages come down, that means money's flowing into it because they don't have to pay you as much. They have to raise the rates in order to get you to invest, right? So wow, look at VIX now. Oh my, Amazon pushing higher here though. 220 now on Amazon. So those of you listen to me on Amazon, I thought that was a nice little move there on Amazon. 220.17. I got out a little early, but I was heavy. So, and one of my rules is if a position makes you nervous, you're too heavy. So I was heavy. Yeah, look at that. It's all over now on my social media about the VIX now. Where were they at last week when they were FOMOing into everything?
Yep, absolutely. Like I said, protect your portfolio.
Our keys are still dropping here. We're still seeing now. Look at the Dow now, down 600 now. Oof. And one of the things I said is like when these things happen, look in the commodity sector. We saw gold 33.50 now. Wow, VXX now 45.36 now. It's picking up now. 45.37 now. Excuse me.
2019.
Woo!
So yeah, you know, like I said, I still have my others, my longer dated ones.
You know what looks really weird right now to me? Powell's press conference. Powell's press conference seems a little out of sorts now. What did he see? Because he was wrong. But what did he see that he made him think? I think it got political. I think he was like, okay, president wants it. I'm not gonna give it to him because S&P manufacturing numbers coming out 49.8, forecast 49.7. Previous year was 49.5. So we're getting a little bit more manufacturing. We saw that out of Canada first. Not enough though. 45.63 now in the VIX. We are still pumping here.
Bitcoin under 115 here. I told you don't trust that little buy.
No, I don't. And I'll tell you, I will be interested, like you, by maybe buying some more here at 112. I'm with you on that one.
Yeah.
Tick down 650 now. The advanced decline down minus 4,200. So it's a very bearish day. Nothing here coming up.
No, nothing that's going to save the market unless the taco trade comes back out.
Oh, I expect a taco trade. I expect Trump
to capitulate.
Yeah.
I don't know. I think he's going to hold on this time.
We said the same thing about August 1st.
I know. I'll tell you what, though. I'm willing. Well, I'll bet you a bottle of booze on that. What are we betting?
You pick it. I don't care.
How about you know what? I've been drinking a lot of bourbon lately. How about a nice bottle of Blanton's?
All right, bottle of bourbon it is.
There you go.
I think that he capitulates again.
Man, he does. I don't have much faith in him not to.
Why you bet me bourbon? Like, that's an easy bet, bro.
Yeah,
your bet's all about. Yeah, I don't think 220.43 now. Look at this at Amazon. For those of you who are paying attention to Amazon this morning, I like this pickup here down here because I do think if there is a FOMO buy and dip kind of mentality, that it's going to be in things like that big quality stuff that will still be.
You hope. Although I haven't looked. What's Figma trading at here, guys? I didn't look. Damn it. It went up to 142, Steve. 142.91
right now. 121. Yeah, it's coming back down to. I think
118. I might get my
are dumping right now, right?
I gotta go. Hey, I gotta pull off my $50 bid here. Hold a second. I think it's still in the system.
116.05 now on Figma. The insiders are dumping here now pretty hard. 115.50, 115.72. Although I'll tell you what, I would buy it here, just because there might be some people buying into it. Who knows?
I would think there would be. I just don't know where that spot is.
All right, I am long here. We'll see if I'm right on this. Probably not. Ouch. Let's see here. Oh well, no, that's okay. Okay, ouch. Yeah, ouch. Oof. Okay, maybe I am right. Okay, let's see. Oh, I was right. Okay. It's moving pretty fast, though, Howard.
They are. It is.
It's a little too fast for my taste, but it is what it is.
Yeah, it is crazy. That Figma is nuts. Q's now down 2 percentage points here at 553.71. SPY down 1.7%. Dow Jones down 1.5%. Advanced decline minus 43.86, and the tick still moving to the downside here.
Out at 116 there, Howard.
Nice.
Woo! I had a feeling it'd be able to bounce off that bottom there. It's getting around those numbers. So for those of you playing at home with me that I said I was going to go in, I was in at 114.82 to 116. So yeah.
Nice.
That's a fast traveler, folks out there. Be careful out there for those of you playing at home. But 117 now. I just get too nervous. I think this market's just moving too fast. But look, I was 117.50 now. Oh wow. That's okay. I'll take that money and run, baby.
Absolutely. Yeah, this one's going to be nuts all day. You could just play this all day long.
I don't. It scares me though, Howard. I mean, I want to put this into good use, right? I mean, and Berkshire Hathaway took a little bit of a dump there. I could take some of this money here and add to my position here. Part of you just wants to put it in some mutual fund that might have been getting beaten up over the last few days here.
Yeah, absolutely.
Oh, look at the Bitcoin, 114.2 now.
Yep. I don't know. I tried to get in a short here. I don't think I got in though. Nah, it went too fast for me. I was trying to get in the perp on Coinbase there. I'm gonna pull that order. Hold it 1 second.
And VIX now pushing higher here, 45.70. Dang, Q's dropping here.
Oh yeah, we are just gonna slide.
Slide. Makes me feel old now. Thanks.
Try to get into the short here. Hold on.
Yeah, there you go, Zora, in the green today. How'd you make it the green? How'd you get that green today? Ba-boom, ba-boom.
Good job, Zora. Love it.
Amazon 217.90. I think it might pull back. I'm gonna pull up a day chart on Amazon. I just feel like it needs to get back to about 210 for me to get long term excited again. Yeah, everybody here should be in the green today on a bad day because we were all protected tonight.
Absolutely.
Yeah.
Nice.
Yeah. Well done.
Good old
spoos. Oh, there we go. Bitcoin is still dropping 114.2 again.
And I am short here on Bitcoin. Quick scalp.
Now there's literally a 90% chance of a cut, 25 basis point cut by March of next year. But I think Steve Flanagan's right. I think we actually see before then. 218.45 now on Amazon. Ouch. Dang. Advanced decline down the low of the day here, 46.75 now. Ooh. Tick is trying to push back up a little bit here. Still down.
A little bit of bottom buying even on Bitcoin here.
Yep. Look, I mean, there's a good chance we could see some trade deals over the weekend, and Monday morning we bounce right back up, and then I'll be taking Howard's bourbon bottle. But the you know, I don't know. I mean, this too chaotic right now.
Well, trade deals don't count. Trade capitulation. No. Trade capitulation. In other words, if he, what if he says that they whatever? I'm saying that the capitulation, where he just panics and says, if he gives another 90-day window, we know what it is.
I mean, he gave another week.
He define it, but you know it when you see it.
Yeah, but he gave another week though.
I'm not counting a trade deal with Bosnia as my as the reference point here.
Well, I tell you, IBM down another 1.5%. If you pull up a daily chart on IBM, that's right at that 200-day moving average. I do like that move there. Wow, that's interesting. Tick now down 280 now, so we may go positive here. I like IBM here, folks. If you're looking for a longer term, looking to buy some alpha here for a little bit, that's really interesting there. Yeah, we're seeing some Qs here. Looks like this, and the VIX is dropping here a little bit. So that might have been the end of the selling, which I kind of felt like it was earlier, especially when I saw Amazon turning. Amazon now 218.36. So I think it was going to lead a little bit.
Tick still negative and still moving.
Yeah, we're not there yet. We're not out of the woods.
I don't know if I'd call the bottom in yet.
No. I mean, I've been calling for this sell-off for a while, and here we go. We're sitting right on it, right? And it wasn't even a long time ago, actually. It's not, it's
Again, I would just point out, as you've said, we are back where the path of least resistance today is to the downside, because capitulation. You don't want to be on the wrong side of capitulation. It'd be okay to be on the wrong side of a mean reversion trade. Don't be on the wrong side of a capitulation trade here.
Yep. Never be on the wrong side of I mean, the path of least resistance is down to the downside here, but a lot of it got worked into it. We'll get
some sanity. Will come back on Monday. Don't get me wrong. I do think we'll see some more sanity on Monday. I just think this is
122 on Figma.
What is that?
123 now. Didn't we just play that sucker at
yeah, like I said, I'd be a seller at 130.
Oof. Weren't we trying to when we play that 118?
Yeah. And again, you didn't have to pick the bottom. The bottom was 110. Pick it at 118 and look for this run. But that's where you're going to run into I can't see it breaking through VWAP. That would be, if it does, watch out above. I will tell you.
I was playing it at 115, at 122.
If you break 130 here, get ready for it to go. Because all of the amateurs that just use VWAP will start going. This could be fun to watch here. And what I'm talking about is this purple line here. I don't have my screen up. This purple line you see across my screen is the value-weighted average price used.
Here comes the figgy. Come on, figgy poo. Let's go back down.
Let's see what it does here.
We need money to come out of FIG to go back into the regular markets. I mean, that's where a lot of that money went into. A lot of this FOMO.
You get 19 million in volume already.
That's just nuts. I'm seeing 22.34, 20 on a market cap of 66 billion. Oh my goodness gracious.
I mean, it's not trading exactly where Amazon is, who's at 25 million shares, but it shouldn't be that close, right? I mean, Boeing's today's volume is 1.36 million in trading. Figma's 18 times that right now.
Let's do it. Let's bring our boy in here.
Give me 1 second to get everything set up. Here he is, Mr. Flanagan himself. How are you doing today, Steve?
Good morning. Fast-moving markets. Woohoo!
They are.
Woohoo! That fast-moving means plenty of opportunities to the person that stays focused and uses good risk management tactics. as Steve's been saying for a good part of the week and last week, he's taking some profits off in anticipation of one of these type of corrections. I'm going to point out, though, because the dollar index, as we've been talking, has made a pretty substantial correction from its high of 126. We're down around 98.84, at least my last look, 98.90 right now.
98.70, moving the wrong way.
Yeah, but keep in mind, last week's close, 97.67, was still almost over 100 points higher than last week's close. So, a lot of the fluff has been taken off, but we're still higher, and we will be higher, and we're still going to continue to target higher levels. And I look at the overall financial markets, equities, bond. Why money keep moving into the U.S.? If the dollar is going up, how negative can you be in the overall markets? Take advantage of these sell-offs. This market is the institutional trading has been short, right? We talked about it. They can't buy the tops and sit on a trading desk and explain it. So right. Guess what? The narrative is so negative right now, and they're all going to be all over the dip. So you've got to be careful, know your levels, look at where we're
buying here.
Yes, absolutely. They've got to cover their shorts. This is the door that's giving them the way out and going, hey, boss, I was right.
It's a double whammy, right? They close out the short and then they just start to open the long. I see what you're saying there. Okay.
VXX now 46.11 here. It's getting worse here as the selling continues to pick up here.
Right. So
Steve, yeah, you've been right about this. Thank you, because now I get to go to Japan and have an extra sushi bar.
Yep.
But the nuttiness is still happening, Steve. Figma. I mean, that's just nuttiness, right? I mean,
yes.
Talk to me about other times in history like this, right? .com, obviously, when it was just you could throw a freaking dart at just pick 5 stocks, put it on the dartboard, and throw it on, then you made money. It didn't matter what you bought back then, right?
Steve, I think I've over 100 appearances now with you on Quasar Markets here, and one thing I have talked about, Howard has alluded to it again today, the tectonic plates underneath of the financial markets rest, the pivot. When you're on a seesaw, one up, one down, the fulcrum in the middle is foreign exchange, right?
Yep.
And everything has been thrown out of the window with the interest rate decisions around the world all beginning to diverge from each other. Have I ever seen it like this before? Yeah, early 80s. I sent you guys a good tape about the prediction. But yes, I have seen it like this in the early 80s. But for the last 30 years, 40 years, the central banks of the world have been putting their hands around the financial markets and putting controls back in. That has split wide open.
But in the 80s, the speed of trading was not nearly like we are today.
Precisely.
So let's take the speed of trading out of today and the speed of trading out of last, the 80s. What's the fundamental difference here between the 80s? I mean, right? Okay.
Volatility.
Yeah, that's what.
Look at the chart. I mean, yes, Steve, you've been talking VIX. The VIX is up, but is it up compared to a historical? No. So back in those days, you would be plugging into your broker in the 80s. In this market, you'd be saying, what's dollar yen? And the broker would say, well, 155.40 paid last. And somebody would say, I need a price, and you'd make 155.40 was last bought, so I'm going to make 156.1030, and the guy would go mine. Right. So it just gapped a big figure.
Okay, so those of us that don't know how that means, when a taker, right? So explain what that meant with the taker on the side of that one.
Well, first of all, price discovery was, you went into a broker, a voice broker, and I would urge the viewers, you want to see something, type into Google foreign exchange dealing room, early 80s, and you'll get a whole idea of what it was like. There was no price discovery. Today, you look at the screen and you say, oh, dollar index, 98.94 bid, 98.96 offer. And you go, I want to buy mine. And you pay the offer. So back in those days, they would say, it's 98.93 bid. I've got no lid. I've got no top. There is no offer. So how do you know where you can buy? You put your finger up in the air and you use your judgment, your intuition. You feel the vibes of the market. So when I'm talking to our viewers, I'm using 40 plus years of vibes, intuition into a market that never had price discovery to today. And that's why I say, be careful of the narratives that are constantly coming out, in the marketplace. These narratives are, somewhat, they work for the institutional side of the market. You've got up here, you've got to use your head. Look at, where are the screens in that picture, Steve? Where is the screen? There are none. Where is the ticker tape? It's one ticker tape up on the wall that everybody turns and looks at for news. So the discovery, you had to use your intuition to make, and there's the two phones. Gosh, I love
phones, baby. That's what it used to, and it was wireless. It wasn't wireless, baby. It was corded. You only had to go. You couldn't go very far from your seat.
Oh boy, I had an extension on my cords. I used to have them specially ordered. I could go about 25 feet from my desk, so I could walk around, because, boy, when you sat for 9 hours a day sitting like that with two phones, it got a little hairy. But Steve, my point is, look around, dissect the information. 3% growth in the U.S., no growth, really. I mean, Europe had, 0.1, 0.2 GDP. It's about the dollar. The dollar is the story. The dollar index is going to close higher on the week. Let the equity markets breathe. We always know corrections are excellent for the market. They offer opportunities for the savvy investor to step in. You talked about Amazon today. I mean, that's the way you have to look at the market here. The job growth is downshifted to slower. Well, guess what? Mr. Powell put it out there. I've got two numbers ahead of me, he said. And guess what? The first one was a fastball right down the middle, and he didn't even swing.
All right, let me ask this. Okay, so we talked about Steve. I said this today. All of a sudden, his presser looked very ominous now. Something doesn't add up now. Something that I think, I don't want to say this too bad, but I think it got political. I think this thing is political now. And I'll throw my name, BigBeat, I'll throw my reputation on the line and say, I think Powell got political. He's going to say no. But I saw him and Trump talking in the floor, and the new building they're working on. They did not seem friendly. No. This is literally the president of the United States talking to the Fed chair of all the banking systems in the United States. Okay. We're not getting along. By the man who picked him to be the freaking Fed chair.
Yep. Anybody who's had a teacher and raised their hand and questioned perhaps a fact that a teacher has said, I use teacher because the Fed is the majority of academics. Yeah. And the academics have decided that tariffs equals inflation. And it's not
Why do you say academics, though? Why do you say academics?
Because only 2 or 3, I think it's 2, members of the Fed board, the voters, have market experience. They are all academics their entire time, coming from universities, coming from different institutions, but all in the academic side of the models. And they are not going to be pushed and shoved.
Chris Waller from St. Louis, right? My home area, right? He went to Notre Dame, Indiana, University of Indiana. He went to UK, Kentucky, for those of you who don't know. He has a bachelor's and a PhD from Washington State University. So he's an academic. He wasn't in the markets.
He's listening to people. He's listening.
I agree with him. When I met him and Bullard, I can tell you those guys their ear to the ground. I think that's exactly right, Steve. I think you nailed it right there. But make that a short. They are the ones listening. Now, are they listening because they want Powell to tell them or to Trump to tell them what to do? That may be true, right? Maybe they want to be the Fed chair, and this is their way of doing it. But I think you're right. They're listening to people. I mean, these numbers, Powell said the two things is 2% and jobs. He said jobs looks good. That's his quote. Jobs look good. Jobs don't look good 2 days later, Steve.
For 40 plus years on my desk, on my monitor, I have 2 words: be flexible. You must always be in the financial markets. You've got to be able to change yourself in a high-speed environment. We exist in a high-speed environment today with computers, with information instantly transmitted to the marketplace. If you're not flexible, which the Fed is not, Powell, including the academics, Waller is one of these people, along with Goolsby. I watch him. I'm going to watch his comments real close now. But these guys are listeners. They are aware of the market dynamics today. And I think what you're going to see is there's going to be a crescendo here for next meeting for a 0.5% cut. And I don't like that. You could have given a call. Look, the June number was 13,000. If that wasn't reason enough to give a 0.25% cut to a restrictive monetary stance, then what would be? I mean, so you've got no defense.
On the flip side of that, Trump wants 1,000 basis points. He wants to go crazy, right? I mean, he wants nuts.
Yeah, you're not going to get that. I think maximum downside in interest rates is 1%. Maximum.
Yeah, I agree with that. Yeah, 1% is enough. Yeah.
Yeah. So, it's going to be an interesting one. Fed Waller already on the news wires, right? Tariffs are a one-time adjustment, and policymakers need to take that into account. The hawkish hold on his part, Powell's part, not a good thing for the markets. So, you've got to study this correction carefully. You've got to be prepared. The dollar index will close higher on the week, and that is in itself a positive that you've got to take into account.
Well, we saw the Dixie get over 100, right? And it seemed to be that's where the stopping point was. They were at now 98.87. There seems to be a lot of sellers on the Dixie at 100, right? Because they were following your mind. They were following your ideas there about getting in. But right now, look at the advanced decline line down 4,800 now. But the dollar seems to be chilled out a bit now, right?
Steve, the biggest consensus trade in the marketplace is a weak dollar. And until we get above now the next level of 160, you're going to sell the rally. However, we have higher lows in place and higher highs now on the technical side of things.
Right.
So right now, the institutional world is squirming to get out of a position, and they will try to drill this, but it's over 100 points higher on the week. There is no way that this is going to close lower. They're going to have to start covering these positions, and this narrative is going to change. And if you were outside America, if you were an institutional person sitting in Europe, China, anywhere in the world, and you're looking at 4.5% and Powell not cutting rates, this is a great opportunity to buy U.S. bonds.
Right.
What a great, high interest rate.
So is this where Howard and I been talking about it all week, and then it's one of the things that's been sticking with me is the sheer amount of money on the sidelines. Buffett, you name it, all have raised big cash, including myself. Like, let's talk about that for the future, right? So, is this where the money's going into the bond market? Is this where they're putting the money now? Because you saw the drop from 4.4 here to 4.237 in minutes here,
which is a huge move in the bond market, right?
Huge.
You don't see those type of moves.
That's almost jumping out of a window kind of thing in New York City.
Right, and consider institutional side with $5 to $10 billion. That's a massive profit on the day. So yes, Steve, I do think very much like you saw in Europe Let's roll it back when you and I were talking about Christine Lagarde suddenly turning, and cutting rates. Money flowed into the euro and into the Bunds market and catching that great move. Likewise, it's pretty obvious right now that the Fed is going to have to cut because he keeps hammering his dual mandate as, employment, the reason why he can't. I don't follow these numbers. I follow the U6 number, which is the overall employment, and that went up 0.2 of a point, 7.9%. We are closing in on overall employment in the United States. We are on the doorstep of 8%. So where is his dual mandate? He better start getting involved here.
So let me explain what Steve's talking about here, and I could not agree more with Steve on this. For those people who don't understand, labor numbers are not just labor numbers. They are different numbers within the labor department, right? And we have U1 all the way to U6. U6 includes all unemployment. That means people that have even left the ability to even get a job, that are not fully employed. And he's talking about the bigger number. And that number right now is still 7.9. We've only come down from 8.2 literally a year ago. So he's right. I mean, these numbers are very, very high. And if you look at, I guess, what Powell is saying, he looks at the U2, that's the people who just lost their jobs and temporary jobs. That's what he's saying. There's your 2%, right? And if you're looking at total unemployed as a percent of the civilian labor force, meaning that's what we mostly look at as U3 number. That's what the sum of the 4.2 unemployment number, right? But the true, real number, people that have just given up completely, I call the hopeless number, U6 number is still 7.9. It's not really moved much since last year.
That's right. And, that's the number where every time we see another corporate layoff, let's think about it. Come on. A guy who's been working, a woman who's been working, so, an employee who's had 22 years in a business, that's pretty much their lifestyle. And suddenly they're handed the pink slip and out they go. What do they do at 50 years old, 55 years old? They need a job, but where can they find themselves? This is the number that catches all the people that kind of, I don't know what to do. I give up, I can't go back to school and get retrained. And so this is an important number to watch. And a 0.2% jump is big in that number. So let's see. I mean, he said he's got 2 unemployment numbers. Okay, well, he's got 1 more to go. If it doesn't come out and be gangbusters to the upside, then you can pretty much say employment has slowed in the United States. It's downshifted major. Yeah. And that is a good reason. Again, when I argue this, I argue it because the Fed presently is restrictive in their interest rates. And in a situation where we're beginning to see weakness, a 0.25% cut is not a big deal. And it shows that we're at least watching and concerned. They are painting themselves into the ivory towers up above on Mount Olympus. And, please, sir, may I have another, the Oliver Twist movie.
Or feel like Animal House where he's getting spanked, and he wants he gets spanked and he wants another one. I like, okay, dude, I get the hazing side of it. Steve Flanagan, Mr. Currency, have a great weekend. Thanks again. And you're right, man. Over 100 shows here with us. I appreciate you, man. And we'll talk after this pretty soon and give you some good news, my man. But all right, Steve Flanagan, we'll see you right back here on Monday, my man.
All right. Take care. Have a great weekend.